Before I go with the disclaimer and disclosure, which is mandatory, I'll just give a brief introduction of my journey into equity markets. So I have been investing for almost 10 years plus now. I did my B mechanical engineering basically from Chennai. I did my B mechanical engineering, and I don't know why I did that, but anyway, since my engineering days, I was drawn into investing. I started with not knowing what the market is all about, but it all felt so fascinating. So I tried everything from trading. I would not say investing, just buying random stocks based on tips, etc. Tried my hands in futures and options, technical, everything. But over the 3 years, I would say I tried a lot of things and slowly learned what actually works for me as a person and also the kind of investor I am. And that's where I read a lot of things and refined my process and understood what a company is, how do you invest, the importance of being invested in long term. And post that, I wanted to change my career. I was an entrepreneur before that as well. I wanted to get completely immersed into the market. So I did a course in Mumbai from NISM and also simultaneously did my CFA. And in 2019, I had the opportunity to work with one of South India's largest family office. And then I got the opportunity to move to UK. Currently, I'm in London. I was part of an hedge fund. I was part of a private equity fund as well. And I've been investing and following Indian markets all the while. And now I am a full time private investor, mostly focused in SME and microcap. Journey from to SME and microcap was also very interesting. So I have been investing and holding a lot of companies. So when I reviewed my portfolio around 2, 3 years back, what I found out was the smaller companies, the lower market cap companies were the one that actually made huge difference to my portfolio. Larger cap companies were good. They were to reduce the volatility, but then if you had to make wealth, you need to look at those smaller micro cap companies that have long runway, run by good management, and that's where I started my focus on focusing on smaller companies. Also, during the journey, I also realized as a private investor, the journey can be really lonely. I was looking to connect with a lot of like minded investors who are investing full time and also mostly into the microcap and SME space, because that way we are able to bounce off a lot of ideas and share informations as well regarding different companies. And that's how early Edge was formed. The whole idea being finding smaller companies at the early stage, and that's where the edge lies. It's been 3, 4 months now, and really appreciate and thank you guys for being part of this journey. We have formed the group, WhatsApp group, and you guys have been really supportive and following it for a while. And that's where the suggestion came like, we need to have this monthly catch up meeting as well. So we'll have this every month so that we also get to know each other, get to bounce off ideas. You can ask me any questions and also leverage on each other's sectoral background and knowledge as well. We'll have it very open type. Before I start, I have presented something. So before I start that, full disclosure, any stocks that we are going to discuss here or I'm going to discuss here is only for educational purpose. Please do your investment advice. It's not a recommendation or anything. I'm not a SEBI registered investment advisor or analyst. So, do your own due diligence, consult an advisor if required. Return profile, microcaps are extremely risky, SMEs are extremely risky. So be very careful in the kind of companies you are investing in. So with that, as you all, let me start. Second, you might be seeing that every day we release top three announcements, that in the microcap space that caught my attention basically. And I thought I generally track them forward. A lot of questions have come is you do give the announcements, but how do you track them? This is how I do it. So every month I review the returns like the stock has given on the day of announcement, on the next day of announcement, and how much return it has given for the month. One thing which I did not capture is the overall return for the month. So this 1 day return is post announcement, and till date return is since the announcement till the end of the month, what how much the stock has compounded. So if I take that, these are the stocks that have basically appreciated approximately more than 10%. So this gives an insight as to the weightage the announcement carries, and also if there are any repeated companies that are falling in a particular category. So basically, one thing is the announcement is a bit skewed because these are all generally order related announcements, etc. Mostly these are going to be, you don't find any compute consumer kind of a businesses here because they don't give such announcements. So mostly these are good in tracking businesses, government policies, shift, etc. So these are the companies that actually came in my radar or is in my radar. So Yash Highvoltage, a part of the return is basically could also be attributed to post result as well. They released their results as well. So basically they acquired 50% in another Pune based company. Then you have Tarach and Fabric, basically the CapEx announcement. So they are into crane rentals, etc. So they've added 82 crores of more equipments into their kitties. 20% pop-up you saw the next day, and it is holding. So the announcement was on 3rd October. So that's interesting. Six Energy, huge order compared to their market cap. The next day it was not that. I'm not sure on the day of announcement whether there was a pop, but then till date the return has been 10%. So that's interesting. Control System, back to back, like I was able to record two back to back announcements. One is on the Kavach order clearance. So even before the clearance from RDSO, what I found is they were getting orders for coverage, and now with the clearance, they're able to slowly start supplying, which is important. 9% return till date. And interestingly, they also made an acquisition of Future Electronics. This gives them some additional leeway in terms of growth. So once I do that, I review all the companies to see what, like which companies, like according to me, are worth doing deeper research on. You can take this as a playbook for yourself to do deeper research on. But then I'll brief about like why I found these three companies is something which I would be really interested a bit more research on. One is basically Concord Control System. Kavach, it's something government is pushing heavily on and they are focusing on. And one thing when I was reading through the presentation was it takes nearly 3 years for the approval cycle. So that's a lot of huge approval cycle. The TAM is really big. And also with the acquisition, you're right, acquisition of Fusion, the margin expansion could happen because you're entering into a higher margin electronic adjacency. And also there is diversification, a bit of diversification happening. Knowledge Marine is another interesting company. It was not there in the top list of companies that outperform for the month, but then this is a company that has been continuously securing a lot of contracts. One of the recent contract they secured is a 20 years cruise contract and a 15-year green shipbuilding contract. They're entering into shipbuilding as well. And they have done an interesting equity raise where really good prominent players have entered. 1,900 is the price for the QIP. Current price is around 2,400. It has run up as well quite a bit. There's a lot of visibility. There's a lot of sectoral tailwinds and policy push as well. And finally, the third company I like is Yash Highvoltage, again, because of the acquisition and energy demand. And with the data center, AI grid upgradation happening, this is definitely that's a long runway to go for this company. These are my top three companies, and this is the presentation I just made. So it's pretty quick. Before I proceed, like I'll run a quick poll. You can just poll on, you can just cast your vote as to which of these three companies you think has the highest potential in terms of long term runway in term and a risk reward perspective. So it also gives an idea as to where everyone stands. So everyone has received the poll. So let's see as a group what you feel like. Okay. There are 19, 11 of you have voted. I'll just wait for another few seconds. Those who have not casted can cast a vote. Okay, cool. Is everyone able to see the poll and also the results of the poll? I hope it's visible to everyone. Okay. You're not basically able to see the results of the poll. Okay, let me end the poll. Maybe I'm ending the poll now. Share the results. Is it visible now? Perfect. So basically, 29% go is Concord Control, 43% with Knowledge Marine, and 29% with Edge High Voltage. Very interesting. I just wanted to give a food for thought regarding Yash Highvoltage. Like the business, like the company, like the management, did a small analysis. We did a video as well. But with Yash Highvoltage, the only one thing which I need to dig a bit deeper into is the TAM. I don't find the TAM big enough to justify the growth rate. So the management is saying they'll grow at 25, 30% plus. But when I was looking at the TAM, that's so they are basically into transformer bushings. And the total addressable market in India is 1,500 crores. And within that, Yash's addressable market or serviceable current addressable market through which they cater is to only 750 crores. And because they are existing only up to 245 kilovoltage range. And they are setting up unit in US as well. And if you take the global transformer bushing, the TAM comes to 26,000 crores approximately. And within that, again, yes, addressable market is 10,000 crores. So just because of based on TAM, I really like to back companies where the addressable market is really huge. So just based on that, I find at the current price, the TAM is too small for me based on, so they have to, I would keenly watch into how they're going to increase the TAM going forward. If you look at Concord, just on Kavach, their TAM is around 40,000 crores. Kavach is again a new development, but then if you take all the whatever they're doing till now, if you add all the TAM, it's coming to 50,000 crores approximately. So that's good thing. But again, Kavach, they are doing through a company called it's not their fully owned subsidiary, so that's something which I need to dig a bit deeper into. So even Knowledge Marine, the TAM is really huge. They're entering into shipbuilding as well. Key takeaway or insight that I want to put is, especially for businesses like these, please don't just look at what they're doing or growing, look at the future and look what the addressable TAM is. So with that, I'll stop the presentation and then I'll open the floor for Q&A. And you could raise your hand and or just unmute yourself and ask me any questions that you have on any stock specific. I might not have much information, but then I can quickly run you through screener and show what I generally look into so that you can also use that in your framework. So yeah. So any questions, guys? You need to chip in to make this more conversational. Please feel free to do that.
Hi,
Yes,
this is
Kishore.
Kishore.
Yeah.
I just want to know that on what basis you considered these three companies. There are a universe of around hundreds, right, in the BSc or NSC, but
Yeah.
you took these three. And did you also went through the management and are they generating enough cash every quarter so that they can sustainable
So
during the period?
understood. So these are companies, like there are a lot of corporate announcements that happen on a daily basis. And with 3,000, 4,000 companies, it becomes difficult to track all the companies. So this is a way in which one of the ways in which I use to get a tracking list of companies that I would want to research further. So every month, if you see, every day, if you see, I go through the corporate filings and just come up with three companies for each day, which I feel has really good potential or something big happening within the company. I don't take any action immediately until it is extremely material. But then after the month, at the end of the month, I review how the stock has reacted. And then I go through and dig a bit deeper into like what is actually happening within the sector and the company. And that's how I shortlist these three companies. And then I go and dig more deeper into it. One is to create a tracking list of companies that are constantly announcing new orders. So once you create that, something structural is happening within the industry, and then go and dig deeper into it. And when I go and start digging deeper into it, that's when I consider the management quality, what they have done in the past, what it looks like. I use my 20 factor scorecard weekly as well, which you can use. That gives me a structured process to understand whether more research needs to be done. I hope it helps. Yeah.
Okay. It means that you are doing this research of that is the secondary part that becomes to you.
Yeah. So basically, once others, my focus would be like in too many stocks. I want to basically narrow down my focus on companies, where there are trigger points that are going to emerge. Then once I get those list of companies, then I to go and do deeper research. And yeah, my scorecard is basically a tool to understand whether that effort in terms of doing that deeper research is even necessitated, because in microcap and SME, basically there's a lot of froth happening and there is a lot of governance issue that can pop up. So I basically try to stay away from companies. My first criteria is how do I reject a company rather than, and that's where the scorecard helps me a lot because it gives me a structure as well, and also understanding as to overview of the company, and also necessitate if more deeper research is required.
Will you also consider the company which are there in their domain? Assume that example I'm giving you, the XZ company today has been announcing an order, but there might that company, if you deep dive, when you deep dive into it, you found
Mm-hmm.
that promoter is taking higher salary, or as a part, if you comparing with their revenue, or cash
Mm-hmm.
is not generating,
Yeah.
consistently taking the debt, right?
Mm-hmm.
And you found some other company, maybe they did not announce any order, but still that is a good. Will you
Mm-hmm.
go in direction, or will you stop in that active company while researching?
No, no. When I do that research, so I'll definitely do comparative analysis as well in terms of different factors, valuation. So if I find another company which is more clean, there's cash conversion happening. Again, it also depends on industry setup, but also I'll try to identify why is the cash conversion happening, what are they doing different, and why the order is not coming currently, and will the order come in the future? If the answer to those are yes, then definitely the option B is a better option because there is visibility of order coming there as well. And I'm much more on a risk adjusted basis. The promoters are also more aligned with the shareholders. We are at the end of the day minority shareholders. These kind of corporate governance red flags gives you an idea as to how a promoter is treating or viewing the minority shareholders. Right? At the end of the day, they have the majority holdings and we need to be treated with respect. So I'd rather stay away from companies, those who don't align themselves with minority shareholders rather than taking that risk. Yeah.
Hi,
So
Shobit.
many of, sorry, yeah, hi, one second. Many of the question, reason why we are inclined to a particular company is because we don't expand our search, right? So we feel we don't have any other better opportunities. The more, the moment you expand your search and look for those companies, I'm sure you would come up with companies which align with all our framework.
Okay, okay,
Yeah,
fine.
yeah,
Thank you.
yeah. Thank you. I hope it helps. There was someone else who was,
Yeah. Hi, this is Heinz.
hi,
I
Heinz.
just want to get your insights on the present valuation of this company. I do understand valuation of small micro caps can be tricky because a lot of
Mhm.
it is on the future speculations and what it can turn into. But
Yeah.
just want to get your thought.
Which company specifically?
All three that you have
Okay.
specified, you have
Okay.
talked about.
Okay. Let me just open screener.
Go through the screen.
So I hope the screener is visible, right? Yeah.
It
So
is
basic,
visible.
yeah. So basically, this is a tool I generally I mean, I generally use. It's not a foolproof tool, but it gives me a broader perspective as to I do a reverse DCF. It's very important for me because PE can be this is mostly backward looking, right? And market is always forward looking. And I would want to understand how much of the price is embedded into the current price. So basically, if you look at the presentation, I was just looking at the presentation the management is guiding for 30 to 40% growth, revenue growth. And that revenue growth should also translate into free cash flow growth, which is extremely important. With Concord, I'm not able to see that till now because a lot of them is stuck as receivables and inventory. This means that they have to constantly keep diluting if the free cash flow doesn't increase. So that is one of the issues I have with Concord. But anyway, generally we use free cash flow for reverse DCF. So here the reverse DCF automatically pops up. Okay. So since it's already negative here, what I do is I take the net profit number, which is the lower number, and just use it in the earnings part of it. So the net profit, which is showing is 23 crores. And since it's micro cap, we are taking higher risk. So we are expecting higher return. So I generally keep 20 to 25 as a target higher return. and terminal growth rate you can keep it as 2, and the number of years is your 5, which is your holding period. I would be very conservative with the valuation multiples, but then you don't know what the valuation multiples are. Currently, it is at 85, but I would like for these kind of businesses, historically 20 to 25 is the valuation multiple that it has traded in. So basically, after doing that, what it says is the implied growth rate is 33.5, which means even at which means on the current price, has an embedded earning growth rate of 33.5. Management is saying they'll grow approximately at 40 price. Just based on that, it looks like, again, this is just a tool. If I use free cash flow is basically negative. But even if I make some adjustments for, because you're going to receive the receivables, and if I make some adjustment, these numbers can be played with. But again, taking PAT and considering in the future they are able to convert PAT to cash flow, still the implied growth rate is 33. And that's how I say that there is, even at the current price, there looks to be, based on management commentary and current price and the opportunity price, there 20% CAGR from a current price is possible. Similarly, I do for all the two companies, I'll do for Knowledge Marine as well. Similarly, it's a free Chrome plugin which everyone can use. So if you optically look, 51 PE is extremely high, but given the current, they have an order book of around 800 crores. This is also, if you have a very quick, shorter time frame, and this also gives you a best case and worst case, and you can play with the margin. And unfortunately, you can't play with the sales number, but then you can still play with the margin and PE, and it gives you a range of options. So basically, even with the best case of 300 and PE of 40, the price targets come to 3,300, and it's currently trading at 2,400. So 1 year forward, based on this tool, you still have some upside potential. Good thing about Knowledge, they are cash flow positive. That's something I really like. And also they have done good fixed asset purchases. They're entering into shipbuilding. There's a lot of government push. But anyway, free cash flow is negative because it takes into account your investment. So your operating cash flow is 58. Let's see what the PAT is. PAT is 47. I just go with the lower number. So if I take 47 as the figure, and your discount rate is similarly 20, and your holding period is 5, and here I can give a bit higher multiple. I feel it can trade at 30. Then your implied growth rate, here comes to 32. I think the management was, I'm not sure about the guidance here. I can't recollect, but I think it's 30% less. But again, you can still expect a 20% CAGR. I hope this helps.
Yes, Suraj, this really helps. Thank you. Thank you for the
Yeah.
detailed analysis.
Yeah. Yeah. Yes, Kish.
Can I, or shall we? You are taking another question, someone.
Yeah, please go ahead. There are a few questions in chat I'll take after this.
Okay. What I'm saying is that in the knowledge sharing something, you saw that receivables are more and there is a no the negative free cash flow.
In
It
Concord.
could be whatever. Okay, whatever X Y Z,
Okay.
and still you are doing that DCF.
Mm-hmm.
There might be a chances that it could be a trap because and the liquidity can be a problem,
No,
right?
definitely. And that's why, like, looking at those and the factor score, right? You have to take everything together to make sense of the valuation alone. I did that reverse DCF. So if I have two options, right? Knowledge Marine and Concord, I would definitely prefer Knowledge Marine more than Concord because cash flow is happening, they have higher margin, etc. So if you want to take, this is just for you to get an understanding of where the company is currently.
As since we you are sharing this knowledge, I
Mhm.
think it is better you should also pinpoint on the liquidity too, so that people can learn about that and they might not trap into that one. That's what
Liquidity in the
my
sense, liquidity in
the daily trading volumes, whatever.
okay. So,
Yeah.
which for trading on a daily basis, it's listen in SME, this is an SME stock. So your volumes and the bid price is going to be high. If you see my valuation models, I'm using 5 years time frame, right? So in a highest time frame, your trading volumes really don't matter because you're holding for a longer period of time. But if you are trading based on charts, etc., then I would definitely not to do that, especially with SME. And trading volumes, again, I don't know, we might buy one lot, two lot, three lot, right? So there it doesn't much. And but then again, for an investor, please look at your portfolio as a whole. SME comes with huge risk. The bid ask spread is going to be extremely high. There are chances that you will not be able to exit positions as well. So that's why one way to overcome this is increasing your holding period. So that, and that's the only way to go about it.
Right.
Yeah.
Thank you.
Because if you see a lot of charts, like this is still right. If you see this, like it was 1,200, then it came down to 600. So 50% approximately a drop. So you need to hold on through that volatility. And this is one of a very good looking SME charts that I've seen. But if you look at other charts, it's going to be extremely brutal. Any other questions? There are a few questions.
Hi,
Yeah.
Suresh.
Hi. Hi.
Yeah, my name is Sanmat Rao.
Yes, Amit.
Did you observe any cyclicality in the business like Concord or Norwich Marine?
Definitely, there's going to be.
Because these are like
Yes.
government related
Yes.
orders, right?
Yes. So if you see in 2024, because of the election, there was cyclicality. That is again a factor that has to be considered in, because everything depends on government push. But again, rail safety has always been there. You saw how Titagarh ran up in this government push and how it has also corrected when the government push or the spending stops. So be extremely mindful of the valuation, especially in SME and microcap. Your entry points matter a lot. So until and unless you're extremely sure about the future visibility, don't enter at a higher PE is what I would say. Be very mindful of the valuation.
So how you will observe like whether this is exit or this is like entry for these kind of stocks?
Regarding exit and entry, one way I go about it is I always have a list of stocks that I always track, which I don't have positions currently. And the moment I find a better opportunity and I find the current portfolio, evaluate my current portfolio of stock. And if I find that any stock is at an valuation which I cannot justify, so my switch decision becomes easier. So I'm not, yeah. So that's a easy way to go about it. One of the reasons why even I made this mistake is because we don't have a better switch option. And that's why having a tracking list of stocks, doing deeper research, and maybe they might not be attractive now, or maybe our current portfolio is better. But then whenever there is a better switch decision and you have a tracking list of stock, that decision becomes easier.
Okay. And I think these are like growth stocks, right? Based on growth, then we are evaluating valuations and all, right? And do we have any parameter like liquidity ratios, debt coverage? I think you mentioned debt free companies, those are, I think those are fine.
That's where my the 20 factor scorecard comes in, which I use. So it
Mhm.
evaluates based on 10 parameters on promoter and governance, and then on the financial metrics. There is cash conversion, your receivable cycle, inventory cycle, your different ratios, ROE, ROC, captures. All you have to do is upload the Excel to Screener and just download it. Some part in terms of promoter and governance, you need to do go to annual report, dig deeper into it, because Screener doesn't capture it, and which is a good part. It helps you streamlining the understanding how the management is as such. I would suggest do that. As you do it in one, how you can actually make a call as to whether a particular company is worth doing deeper research on. It saves a lot of time, and it also documents your whole understanding on the company. So what happens a lot of time is we do research, we forget what we've done, right? We would have and not recorded the reasons why you have not followed through on the company. This way you have something where you can just record and keep it. So future, if that comes, you just have to refer to the Excel and you get an idea why you dropped the company.
Okay. Okay.
Yeah.
And in case of Yash High Voltage, right? It
Mm.
is listed on December 2024, right? So how
Yes.
you will get that much information and confidence or something like that information? Because we'll see like past history, these are the ratios and these
Yeah.
are the growth rate that they
Yeah.
have given and recently listed. Then how you will evaluate that?
With SME, I look at their vintage year, how long the company has been in existence. A lot of SME companies which are formed quite new, like nearly in 2022, 2020, etc., are also getting listed. I try to stay away from them because it's still evolving. Yes, high voltage. The reason why I say it's a bit more mature is because they started operations in back in 2008 or 7. They have been in the business for more than 10 years. They have seen at least some form of cycle. Though they are smaller company, they have seen some form of cycle and the same management it has. Those are few back of the envelope I see and go through the DRHP. It's a very detailed record of what the business does, how they've evolved, etc. Through that. These are few factors. Generally, yes, what you said is correct. I would give it at least 2 years time for, or at least 1 year time to cool down before even I consider, especially in SME and microcap. But it is again more subjective.
Okay, okay.
Yeah.
And then one last question.
Mm.
So what kind of information that you will grab into to do the research or to find the your companies or options or watch list? Where you can find that, or do you do any screener specific to that parameters, or how you will find the new companies?
Yeah. One, what I do is whatever I just showed you, I'll track the corporate announcement. Second, what I do is in Screener, I wait for the result season, correct? And I look at the quarterly. I just go to quarterly and just look at companies that are giving really huge growth and are in a microcap category. For example, this has given this is definitely a no because it's all negative, right? So I don't even waste my time here. So basically, I look at run through this during half yearly and year end result season to understand what is happening. This gives me some bit of insights. Dolphin offshore.
Okay.
So
Then
just
after
run
that, you will go to the company and basic screener, and then you will read the annual
exactly,
reports and
exactly.
any other information like value picker or anywhere. You will search the
Oh,
information and
definitely. Yeah. So one is shortlisting the company. Next, even many of the company eyes are trained because I've been doing this for some time, right? I just check this because the margins, operating margins are all over the place, right? It's very low for me. I like businesses which are. I just then if I like it, then I just quickly read through what they're doing. If I find the business is too cyclical, no more, it's just a trading business, I just drop it. Then I run if then comes the short list of companies which I find needs a bit more research, which is where I run the 20-factor scorecard, which gives an understanding as to how the whole business is in terms of promoter and governance and the financials. If I still like it, then I take it to the next stage where I go and try to understand much deeper, go to value speaker forum, try to get insights from management con call, etc. Speak with industry people to understand what is happening in the industry. So that takes a lot of time. Whole process is to reject companies, and when I start rejecting, only a very handful of companies come where I would actually want to spend time to do that deeper research on.
okay. And
Yeah,
then one more thing, these are like micro caps, right? And the small companies, and you will not get updated information. It's very rarely, right? Whether half yearly results or quarterly results.
yeah.
How you will get the updated details and where you can get the updated
No,
comments from management? Or,
yeah. One is I generally write to the management directly. That also,
okay.
if they respond, it gives me a subtle clue as to how responsive they are in
Mm.
terms of treating minority shareholders. If they don't respond, then unfortunately I have to wait for half yearly con call. Con call also doesn't happen. Then the annual report, I have to read through the annual report to dig deeper into the way to go.
So what kind of questions that you might raise to them? Can you give me any examples that will be helpful?
So basically, they in the previous con call, they might have said because it's half yearly, right? The plant is operational, or they're expecting a huge order. Basically, what they would have given a time frame as well as to what is happening. For example, AFCOM Holding, they said in September they will receive 2 aircraft or something. I don't know how many of them are tracking that, but there's not been any update from the management in terms of presentation. So I have written to them, not got any response, maybe because it is the result season as well. So things like that.
Yeah, I'll be in the queue. Yeah. Thank you so
Yeah,
much.
you're welcome. Yes, after this, I'll just take the questions from the chat. Yes, go ahead. Yeah. Mm. Mm. Okay, yeah, go ahead. Mhm. Mhm. Understood. Mhm. Yeah, yeah. So basically, I think two questions. Let me just quickly answer that. I think one is on the scorecard. So this is the scorecard. I'm not sure how many of them are there. This is freely available in our website. Please feel free to this one. So all you have to do is this gets automatically captured for all the companies. I also made a video on that. So these are the factors I look into it. And it's again a very subjective way where you score. For each factor, you can score 0, 3, or 5, or based on any up to 5, you can score 50 score on the promoter and governance. And the next is the financial health. So this quickly gives financial health automatically gets captured from the screener. Yeah, two information that you need to key in by yourself is I've highlighted here is the trade payables, which screener doesn't capture, and capex, which you can again. I mean, it's not downloadable, but then you can capture again from screener. So this way you could quickly get an idea. It also you're not also lost when you're looking into different information. It gives you a structure regarding one. So what I would suggest you to do is do this for both screener and women cart, and then if the score for women cart is lower compared to sizes, like I would not even look at women cart even if they say they're going to grow at 100%, because if the promoter and governance behavior is bad, you don't know where there are multiple cases where there have been misinformation circulated just to increase the stock price and promoter doing a QIP or selling their shares. And I'll be really uncomfortable with women card personally, in spite of what they're saying, because I think this is something few people have asked him, like, why are you even looking at that company? Because they're basically into e-commerce and everything, right? So basically, if you see, I don't know, they have this huge inventory buildup, right? So basically, yes, their cash flows are negative, so they'll have to constantly keep diluting. Look at the promoter holding; it's been constantly falling. So these few factors that you need to consider. Don't just go with management guidance. And also with respect to management guidance, like track how they have progressed, whether they have given 20% guidance and they're doing 25% actual growth. on a consistently year on year basis, which means they are they are giving lower guidance but overachieving. I would rather back that company. So that's why history is a bit important.
Hi, Suraj.
Hi, Vijay. Yes.
Hi. Thanks for taking my question. There are two companies in my watch list now, and I would like to take your inputs on these particular two companies. One being Shri Refrigerations Limited, another is OBSC Perfections Limited.
Okay.
Because I've
So,
been tracking these two companies for quite some time, and I feel the management is pretty strong. The particular fields, the particular segments they address are of great demand. And I would like to take your inputs on this, these two companies, Suraj.
yeah. OBSC is something I track. The management looks, the person, forgot his name. He looks very confident in what he's doing. It's a company I track. Again, a very new listing, I would say. Stock price at a PE of 45 is something, valuation is something I would be, let's see, like this quarter number, half yearly number is coming. I think they've already given a guidance of 30% plus growth. That's my take. But this is the risk I would like to point out to everyone. In microcap, this is an SME company, some 264, it went to 150. So that's like almost a 50% detraction. So until and unless in and out of the company, you will be very critical. But regarding the business verticals, yes, they're going into a lot of adjacencies, like they are entering into defense, they're entering into building. A lot of optionalities are there. They are also guiding for operating margin improvement. So again, I'll just run a quick smart analysis to give you an idea. So basically, they have done what, 17 crores. I think we are already this half yearly. It should be 20. Again, this is important. Free cash flow positive. This is a very important factor. Please be mindful of that. They have done a big capex of 33 crores as well. So normalizing it, even if their earnings are like around 20, their discount rate. This quickly gives you an idea as to current valuation, whether it's attractive or not. By a multiple 25, the valuation is what a bit. So the implied earnings growth rate based on this is 25%. Management is guiding for 30%. Let's see.
And one more thing I would like to highlight here is I don't know whether that's an advantage or a disadvantage here. The company's order book, as per the latest presentation, stands at
Yeah.
1,200 crores.
Yeah. And yeah. That's a good thing, right? That gives a visibility.
Yeah.
And these are,
No,
I think, the, yeah, go ahead.
sorry for the interruption. But for a company of this size, do you think a hefty order book of 1,200 crores is a positive sign or just they're inflating their order books? What's your view?
I don't think they are inflating their order book because these are orders that they have received from reputed companies.
Yeah.
It's not, it's some unknown companies. These are reputed large companies. They have orders with Tesla, etc. So based on that, I don't think they are inflating it. If there are some unknown companies like private companies, then I'll be like skeptical. But these are reputed
Yeah, very
companies.
renowned players in the market.
Yes.
And they're entering into defense as well. They're entering into marine as well. They're entering
Yeah.
into all
Yes.
segments.
Yeah. Basically, with whatever machines they have, precision manufacturing, right?
Yes.
They're
Yes.
entering into a lot of adjacencies.
Yeah,
Sri
they started with
refrigeration. Go ahead.
they started with 3 or 4 machineries, milling machines,
Yes.
and as on date they have 500 plus machines. It seems.
Yes. They are
Yes.
aggressively growing. So that is one other thing I generally look for. What are they coming for IPO for? Are they coming for an IPO to set up a new plant, which is what I generally like, because if they're setting up a new plant, it means that IPO money is utilized for driving this revenue. But if you are,
Expansion.
yeah, it's for expansion. But if you're using it for working capital or promoter just diluting, which is not, I'm not saying it is wrong, but it's most of the money is going for working capital requirement, etc. It means the business as such doesn't have a strong.
Okay.
Yeah, I would drop Sri refrigeration because I don't know much about the company, but I would definitely look into it, and maybe next time we'll discuss that.
Please do, because what positives I saw on Shri
Mhm.
Refrigeration is the management is pretty strong. They've been in the business for almost 20, 25 years now. And the management is very humble, down to earth management.
Okay.
And they are serving for the Indian Navy. The Indian Navy wants
Yes.
to modernize all the refrigeration equipment in their fleet.
Mm.
And you know how difficult it is to get into the segment of defense in India.
Yeah.
And apart from this, there is one more interesting part about Sri Refrigeration. They fabricate each and every order. For example, if there is a submarine and the government says, defense says that we want the air conditioning unit of this particular size, this particular capacity, they actually manufacture, custom make the product and supply to the Navy. And
Sure.
it doesn't end there. It is only the starting. The maintenance part, the service contracts over a period of 7 years, 10 years, paves a way for recurring income.
Okay. That's
So that is
interesting.
one big thing I liked about this
Mhm.
company. Please keep this under
I'll
your radar. And
I'll do that. Thank you. Thank you for suggesting that. I quickly did it, but I can't recollect much. But then I'll definitely dig more deeper into it.
please do, Suraj. Yeah.
Sure.
Thank you. Thank you so
Thank you,
much.
guys. I'll take few questions from the chat. Shobit has asked, after your 20 factor analysis, what are the five things you go deeper into? So it's not five things. Then I look at, then I first understand the business to the granular level, what all they are doing it. Start reading a lot of industry report around it. Look at peer comparisons, definitely who are the listed players that are there and what the business that I've shortlisted has is doing better than the peers. Value Picker is a good place to dig into the historical thing, read through Concord's, their annual report, their journey. And I noted down. The most important thing is note down everything that I have recorded. And finally, if everything ticks the box and if the valuations are attractive, valuations is very important. I try to understand what my holding period is and what the trigger points can be. Do I use technicals? I do use a bit of technicals here and there as well to time my entry. And I'm more of a longer term player. So I hold taking a view of 3 to 5 years and then I keep track of what is happening. And if any of my thesis is broken or management has done bad capital allocation by decisions, then I try to exit it. These are the things. The next question is on Sika Interplant. Niche aeroplane is a niche aerospace and defense engineering company, strong revenue growth, high ROC, debt-free balance sheet. What are your thoughts on it? Yes, I really. One thing is they're not doing con call or giving any presentation, which makes it a bit difficult to actually understand what Sika Interplant System is doing. Basically, they are entering into MRO, if I'm not wrong, and they have tied up with one of the largest US-based MRO company. I'm not sure what they're tied up for. So those clarities are not there. But apart from that, they have a long history. The valuations currently for me it's too rich, so I would wait for it. I'll try to dig deeper. I hope the management starts giving con call and a presentation that makes our life easier. As someone who's successfully built a career in small and micro cap equity research on the buy side, what advice would what would you advise a student like me pursuing CFA aiming to enter equity research to focus on the most in order to stand out early in the field? Okay. If you're trying to make a mark in the industry, I would suggest please do your CFA. Definitely, it would help in your career. Go to a lot of events, start networking, try to identify a list of companies that you like to work for and try to make contacts there. And if you're passionate, you will definitely make a mark. Try to identify what your niche is, like any sector, industry, go deep into it. When you're talking, make sure you have a lot of examples of companies that you can bounce off. That way you stand out from the crowd, especially you're 21 years old. So all the best for your future, and I'm sure you'll do well. The next company question is from Gopi. Do you start with an investment team and then find companies, or do you focus on companies first? Example, MFI is good, aerospace, defense. What is your selling framework? I think I did speak a bit about my selling framework with investment teams. It's again, I showed you two ways how I generally shortlist companies. Those are companies first approach. I do investment team as well. Generally, when I look at the result season, the investment team automatically populates because when I start analyzing companies, then you get an idea as to what kind of sectors are generally posting good results. For example, you said BESS, aerospace. One sector is PEB, pre-engineering manufacturing as a theme, right? Like structure as a theme is something which has posted good results. So I would definitely dig deeper into that, those companies and sector. So it goes both ways. And sometimes there are really good research reports on industries that come out. I read through it to understand, and I do look at it. It is both ways, but at the end of the day, we do end up with the company. Do you know about Gina? It has always come in my radar, but I mean, I always don't dig deeper into it because I generally don't understand what they are doing. Unfortunately, I did not dig deeper into it, but yeah, they have given really good returns. I think regarding the promoter, I think Value Picker has a very good thread on it. There was a mixed view. So maybe read through that. You'll get some insights. Okay, a lot of talk specific questions now. Nitin, do you have view on J-beam laminations and Villas transport? I think something similar. These are all things that are falling under the company category of high voltage that we discussed. Yes, regarding structural tailwind, that's a huge structural tailwind. Just look at the valuations before entering, but then considering grid upgradation and need for moving from renewable to so there's a it's a decadal theme that is playing out. This is a good, you can have some, I would personally have some allocation to this theme. I think we are here. It's been 1 hour. We started at 4, it's 5 p.m. now. I thank you for the active participation. I would open the floor for 2 minutes to give any suggestions for our next meeting so that I'll be prepared with that, which I could incorporate for our next catch up. We'll try to have in the first week of every month so that we have some updates of what is happening in the month, and then we'll take it from there. So any suggestions from you guys? How did you find the overall meeting? Was it useful? Was it value additive? How could we increase the value? That would be helpful for me to understand as well.
Hi, Suraj.
Hi.
Yeah, it's a nice first time coming to the call, so it's good. One suggestion before the call, if you post what kind of companies that we are discussing, so
Okay,
it will be helpful for others also to go through, and it will be like specific question or business related questions will be there. So the discussion will be
understood. So
very
what
more
I'll
beautiful.
yeah. So the same. I'll continue posting the top 3 microcap, and I'll do what do I say? Add the presentation of the companies that we are, or a list of companies that I would be discussing on definitely before the next meeting. Please do a detailed analysis. I think I would not be able to do that. I think from SOIT has already done a very detailed analysis on BE as a sector in its YouTube channel. It's a huge sector for me to cover as such, but then maybe stock specific, we could probably just ponder on.
And
Hey,
did you post your notes or somewhere anywhere, or it will be like in your local?
Which notes?
No, if you are researching any company, right? You told like you will be writing some notes, right?
Oh, that I
While doing the research.
so mostly I key it in my local this one. Like few, I also put my team also have this discussion. We run through the 20 factor. I think we do post those videos as well. That gives an insights.
Okay.
Yeah.
Thank you.
Okay.
Suraj.
Yeah.
Hello. Yeah, I have one small feedback on that on A20 class code analysis. Why not we make the promoter quality, related party transactions, as well
Mhm.
as the promoter salary as a percentage of revenue should be a high priority because since you considered the entire sheet as 100 points, right? And that might get diluted if we give three or four. This is the first three that should be high priority, that there should not be any other negotiations, or we should not take a way if these are not met, right? Let's keep these three, and then you can make the 85 point whatever. That is a man, that can be either 75 they are eating or something else, that is okay. But these are the high quality that should be maintained, that must be maintained.
Definitely, it will anyway. If you are having that, it will anyway. You're going to score it as zero, right? For related party transaction and all the other things. If they don't, it will automatically pull down the overall score. So when you do it for across 10 companies, 20 companies, right? This company would not even be there in your list. Basically, you not only just score it, record the score so that once you do it for 10 companies, it's easier for you to compare. And I do understand, like it's anyway the sheet is addictive. So if you want to maybe feel comfort in score, giving a score of 10, you can do that automatically. It's not a hard and fast rule like what I said should be followed. It's just a suggestion. You could incorporate your own scoring system, but then make it standardized so that your comparison is standardized.
I'm not bothering about whether it is pulled down or not. But thing
Mhm.
is that if these three are met, then the rest out of 85 can be
Understood.
can
Yeah.
be we can consider whether it is a go or no go from there
Yeah.
onwards.
I
To
would, I
do
would,
a to do a deeper research from there on.
I understand what you're saying. I would, if these three don't fall, I would not even look into the company if these three are not met. I would not
Mm,
even worry
yeah.
about the overall score. I would not waste my time. If take Gensol for example, they had 3 pages of related party transactions. I would not even waste my time in even if they say they're going to grow at 300%.
But you may have considering the your time by giving a rank of 3 or 4 to them. So instead, let's keep them 5 out of 5. If they are meeting on that, then only we should give extra deeper analysis for the rest.
No, the rest is what? The rest is financials that automatically captured from screen. You're not going to do anything. So you can start with the related party transaction and other things, and if you want, if you're uncomfortable there, you can drop it.
Okay.
Yeah,
Okay.
yeah, yeah.
And I
Sure,
also, I'm with Hanumant Road, as he said, before you are coming up with any three stocks or whatever number,
sure.
just do post at least 1 day or 2 day before, so that give us a time and we can also
I'll do
come
that.
back. And when you are coming up, then we should have some questions or we may see some insight on it.
Yes, you can definitely share your insights as well. Anyone from the industry can also throw some insights that we might not know. That would be really useful, which is a very good suggestions. I would definitely add in the list of companies that I would be presenting, and then you could throw your insights on that. That's well taken. Yeah,
One more
cool.
last question from my side is that have you considered total market size for Ashvolt? That current trend is on the data center where lot
Mm.
of transformers or cables, or I may go to the electronic side, but it's not like I'm just restrict to my electrics now. So there it need a lot of investments and lot of things are going down. And by 2032, I can say that data center business itself is a huge in trillions,
Yes,
right?
yes.
And in your consideration, total addressable market for H voltage, you shown it as a 10,000, as 15,000 something, and as well as 26,000 if it is a global. Is
This
it
is from
included?
management. It is included. This is from management. Their estimates. So it's not my estimate. Management themselves
I
has
see.
given this damn.
I see. Okay.
Right. Yeah.
Thank you.
So thank you. Okay. Thank you everyone for the wonderful contribution. It was lovely meeting you guys, and we'll do this every month. And anything you guys are part of the group, do continue supporting us. Do share the group, and also to your investing friends who can be part of the WhatsApp community. And also, please share the link with them if they are looking forward to joining and interacting as well. Thank you guys. Thank you everyone. Have a good day. Have a good week ahead. See you all next month.
Thank you so much. Bye.
Thank you. Bye bye.
Thank you.
Take care.